item for discussion at Workshop DS 18-039, City Manager updates, and that's with Mr. Olson, preliminary budget.
Thank you, Mayor. The intent of this item is to simply bring the council up to date with where we are in the budget process, lay some groundwork for some future discussions. I'm not asking you to make any decisions about any of this material at this point in time. I'm not even inviting debate over it. I'm certainly happy to answer questions, but the intent here is to bring you up to speed with the status and the staff work on this budget. That's it. We were working on this. This is a fluid process. You'll notice that every page that you have is marked draft because every page is subject to change at this point. We're not going to be able to finalize these numbers until mid or late July because we will not, there's so much work to be done between now and then on the part of the staff, and we will not have our property tax numbers until the 25th of July. So there's no way we can finalize our presentation. You'll see from a slide later on that we're going to be showing you that that on August the 7th, we intend to transmit the budget to the City Council. At that point in time, the budget will be balanced. At that point in time, we will have the facts. We'll know everything that we're going to know. So when we give you the budget on August 7th, it will be balanced, it will be accurate, and at that point, the council can start digging into it and spend the entire month of August and half of the month of September going through it in as much detail as you need to. So again, this is a preliminary kind of status report on where we are as of right now today. Much of the material I'm going to show you is in the same format as what you saw last year in terms of demographics and background material. Toward the end of the presentation, there are a couple of new slides that we put together. Some of the material has been updated to the extent we have the facts to update it. Some of it still yet needs to be updated and will be over the next month and a half. So that's kind of the preliminary. If we go to slide number 2, this is a population comparison of the city of Killeen to our benchmark cities. These are the same benchmark cities that we used last year, and we're continuing to use the same ones for the same reasons we used them last year. Slide number 3 is population. This is an important factor because as we evaluate current needs and as we look into the future, population is one of the primary factors that we use to predict how much budget, how many people, how much materials we need to continue to provide the services that we're providing. If we want to keep doing the same thing in the same proportions into the future that we're currently doing today, we need to anticipate how much more population we're going to have and how much more ability to provide service we're going to need to meet that increasing demand of population growth. So what you're looking at here is up through 2019. These are actual, the most accurate numbers we have in terms of what our population is. Beyond 2019, we've done a regression analysis. It's our projection of what we think it's going to be. Slide number 4 is income for the median household income for the city of Killeen. And you can see the big red arrow there that shows where we are in relation to our benchmark cities. And let me say the benchmark cities is the benchmark cities are a combination of other Texas cities that have similar characteristics to us and local cities that are like Temple and Copperas Cove and Belton and Harker Heights that are close enough that we, even though they're smaller than we are, we need to compare ourselves to them because they're our neighbors. Slide number 5 is an indication of the percentage of our population that lives below the poverty line. In this case, being close to the top is a good thing because we have a very, compared to the other benchmark cities, we have a very small percentage of our population that lives below poverty. Slide number 6 is inflation. Again, up through 2019, these are actual inflationary numbers. Beyond that, we have used, I forget the name of the International Monetary Fund projection of inflation. So, as we look at the future, we see population increasing, we see inflationary increases in both revenue and expenditure, and we try to project that to see what the next 5 years looks like, and then when we put on our long-range binoculars, what the next 20 years looks like. These are two primary factors as we do our projections. Slide number 7 shows you what funds we have. Now, a lot of people think about the city as the city, one organization doing kind of one thing, and it really isn't that way. When we manage the city and when we do a budget, we're really talking about a combination of smaller businesses or smaller operations in total, and they add up to the city. So that's called fund accounting, governmental fund accounting. So when we look at this, we've got 2 governmental funds, 4 enterprise funds, 4 internal service funds, and at least 22 other funds. We have to create a budget for each one of those funds, and that budget has to be balanced. So the revenues have to equal the expenses, and then each one of those funds has assets and liabilities in their business accounts. So we take all of that into consideration when we put together a city budget. Let's go to the next page. Now, this is a little bit busy, but because each one of these funds operate independently and separate from one another, they actually do business with each other. So one fund will provide service to another fund, and they have to charge for that, and the other fund has to pay for it. So what you're looking at here is across the top are the 4 primary operating funds. In the bottom are the internal service funds, and those funds do business with each other. So the lines that we have drawn is the movement of money between funds. And I know in the past we've had people say, well, you know, it's a shell game, it's hocus pocus, and the city is doing weird things. I just want you to know, I've had a lot of experience in city management. Every city I know of, every city I have managed does business this way. The accountants and the auditors look at it very closely. They make sure that you're not doing anything stupid or extreme, and that the books line up, and that the reasoning is sound between that movement. Let's go to the next page. The point I want to make with this slide is it isn't all about money and numbers. It's about achieving our mission. It's about the service that we provide for the people who live in this city. Money is only one of the tools that we use to accomplish that. And the expenditure of money, the creation of budgets, all of that means nothing if it isn't serving the interests of the public. And I want you and everybody to know that we are focused on our mission. We have spent over the last year getting clarity about what our city mission is, what the mission of every department is, and inside of that departmental mission, what is it that makes up that mission? And we've kind of crystallized that in our departmental business plans. So we've spent a lot of energy getting clear about that mission to make sure that the budget is accomplishing our core mission. And we're putting our resources, our time, and our effort on the most important things. Let's go to the next slide, number 10. These are the funds, these are the biggest funds that operate in the city. So we've got the general fund, it's got 903 employees, it's an $82 million budget. The primary source of revenue for that fund is taxes. And a tax is something you pay that does not necessarily have any relationship to the service you receive from it. I could pay taxes all year long that go primarily to the police and fire department and never have a fire and never have a need to call the police department. So I pay for that. I pay school taxes. I have no children in school, haven't had for a long time, but I pay those taxes because it's a general benefit to the community. The Water and Sewer Fund has 119 employees, a almost $41 million budget, and the primary source of that fund is fees. Now, in this case, a fee has a direct relationship to your use of that service. So you've got a water meter out in front of your house, and if you use a lot of water, you pay more than somebody who doesn't use very much water. So with a fee, there is a direct relationship to the service you get and what you pay. Solid Waste Fund, 102 employees, $17.5 million budget, and it is supported by fees as well. There's a Drainage Utility Fund with about 43 employees, almost a $5 million budget, and it is supported by fees. You have the Aviation Fund, 39 employees, $3.2 million budget, and it is supported by fees as well. And then we have a bunch of other funds that we deal with. Inside of those funds, there's 73 employees. It amounts to about a $31 million budget. And the revenue source there is not taxes, but there are various restricted monies that come in, various grants, and debt service is a big piece of that particular fund. Now, I've color-coded this slide in order to send a message to you. If it's green, it's in good shape. We don't have to worry about it. Not this year, and probably for several years. If it's yellow, which is kind of orange, if you're colorblind, it's yellow. That fund is a cautionary fund, okay? And what I mean by that is the fees are not, we're running out of fee. We don't have to deal with it in fiscal 19, but we're going to have to deal with it after we adopt the budget in fiscal 19. We have got to look at the amount of the fee, and we've got to look at the fee structure itself. So sometime after October, we've got to put this on our discussion list and come in and have some serious, detailed conversation about the drainage utility fee. The general fund and the aviation fund are in red because we are challenged in those funds, and there are things that we need to do this year to make them work. So, we'll talk more about the general fund. Let me just say about the aviation fund, because we're not going to go into any more details on that tonight. The aviation fund has not paid for itself for a number of years, and it has used fund balance. So they take in a certain amount of money, and then they draw money out of their bank account in order to do business. That's been going on for a number of years, and we can see the end of the bank account. So we're going to have conversation about what the future is And so one of the discussion items that I'll be bringing to you in the relatively near future is going to have to deal with that. And just to preview it, we're going to have to deal with the parking or a potential subsidy or further drawing down of the fund balance. And I think that's probably going to be the answer for fiscal 19, is do everything we can to balance it, draw the fund balance down just a little bit further, but we can't let it sit there. We're going to have to address the problem in some fashion, because it's just not going to last. So we need to have a conversation about that. And the condition of the general fund will become apparent as we work through the balance of this presentation. So let's go to number 11. This is the budget calendar that we're working on. Staff has been working starting in January on the strategic phase of the budget, meaning what does it look like, where are we going, how do we put it all together in some fashion, what directions do we want to give to the departments to put their budgets together this year, which we did in approximately April. The departments are currently working on the details of their budgets. And during the months of June and July, my office and finance and budget and whoever else we need to be involved will be going through the balancing phase to make sure that everything balances so that when we give you the budget on August the 7th, it will be a balanced budget. So that's kind of where we are. And then we've listed some of the key dates that the council should be aware of, because the council is going to be involved in that process. Once we give you the budget on August the 7th, it comes over to you, and you're going to have to be extraordinarily involved in it for the next 6 weeks. The next slide shows budget policies. I will just say this. With the adoption of the comprehensive financial policy that the council approved earlier this year, we have all of the budget policies we need. Last year, this slide was different because we needed stuff. You gave it to us, and we're in good shape. Slide number 13 are strategic issues that we've been paying particularly strong attention to. We have talked to you, I believe, about every one of these in public meetings before, and we're going to have to bring them back and have more discussion at some point. Balancing the budget is probably the number one priority, and I assure you that will happen. Dealing with compensation equity, this is the amount of money that we pay our employees. We've told you in the past that across the whole city enterprise, we're about 13.5% behind the marketplace. Public safety is about 7.5% behind, and some of our public works and other employees are as much as 30% behind the market. So to me, this is a very key issue. It manifests itself in turnover, in additional training costs, and there's just a flat-out fairness issue associated with this that we need to pay attention to. And then there's retirement. We've had conversation about our retirement. The TMRS system is being paid for on an ad hoc basis, and we're actually living a I forgot the term they use. Ad hoc and annually repeating. Yes. So we pay for it on an ad hoc basis, and we actually live it on an annually repeating basis, and there is a difference there. In truth, we're about 79% funded in our retirement system, and it's going down. So we need to talk about, number one, do we want to fix this, and if so, how? And we'll bring you some recommendations on how to do that. But this is an issue we need to decide whether we try to include in a solution in the proposed budget or not. Then we have the deferred street maintenance. We've talked to you about that in the past, and we have a presentation ready to present as soon as you're ready for it that outlines how the city has dealt with that, previous engineering studies, previous recommendations, and we have go-forward recommendations to bring to you and say, here are your options, and we'll have recommendations, and we'll see where it goes. And then deferred building maintenance is the same kind of issue as the deferred street maintenance. We have a lot of buildings. We have not been taking care of the capital maintenance. We have been taking care of the janitorial maintenance, and our custodial crew does a fantastic job. But they don't repair the roofs, they don't patch the parking lots, and they don't fix the HVAC systems. Those are all capital expenditures that we haven't been doing a good enough job with. So those are all strategic issues that have, they have both a short-term and a very long-term financial impact on us. And we need to understand it, and we need to make intentional decisions around those strategic issues. Let's go to number 14. Number 14 is the famous donut chart. If you look at these charts, the inside of the donut shows where the expense takes place, and the outside of the donut shows you where the revenue comes from to pay for that. What we're looking at here is a 10-year span from 2008 to 2018. The intent there, it's hard to see movement and directional shift in an organization if you're just looking 1 year at a time. But if you look at a decade, you can start to see some changing taking place, and that's what this is intended to do. As we get the FY19 budget done, we will add a third donut there, which will be FY19, and then you can compare those with it. Let's go to the next slide, number 15. This is looking at our budget by expense category. This is the way our auditors look at it. This is the way they report it in our comprehensive annual financial report. It looks at personnel, materials, supplies, debt, capital outlay, transfers, etc. So you can look at the budget in that way as well. Let's go to number 16. This is staffing. It's a graphic representation of other charts that we have shown you so that you can see of all the operating funds, where the bulk of where the employees are, whether it's the bulk of the employees or the minority of the employees. You can see where what funds they're assigned to. Let's go to the next slide, number 17. This is kind of a tabular form of the same information. What I want to point out here is that 10 years ago, down at the bottom, 10 years ago we had 9.8 employees per 1,000. In 2018, it went down about 1 to 8.7. And you'll see in a few minutes that our projection is it's going down even further. Let's look at the next slide, number 18. This is a comparison of our employees to our benchmark cities, and you can see we're approximately in the center of that group. Let's go to the next one. These are priorities that the City Council gave us last year. I assume that they are still the priorities. Public safety first, street funding, better paying jobs from an economic development program, and making sure that we balance the budget and take into account our future needs when we're doing it. Let's go to the next slide, please, and the next one after that. Now we're going to, for the balance of the presentation, we'll just talk about the general fund. This first slide is intended to just, again, kind of repeat what we've already said. The general fund in relation to the other funds, this is a graphical representation of that. 10 years ago, the general fund was 51% of the whole city. In 2018, it was 45%. Let's go to the next page. This goes a step deeper, a level deeper, by looking at departments in the general fund. So On the inside, you've got the departments that we have in the general fund that provide the service, and on the outside ring, you've got where the money comes from to pay for those services. So, and they're in close proportion with the way it really works. In other words, if you look at 2018, if you took all of the property tax and almost all of the sales tax, it would be approximately equal to our public safety expenditures. So the rest of the city general fund is operating on other kinds of revenue other than taxes. And you can see how that has shifted over the 10-year span. Okay, let's go to the next one, number 23. Number 23 is just looking at the budget in a different way, looking at the categories of expenditure, personal services, materials, supplies, capital outlay, and so forth. Number 24 is a tabular account of where the people in the general fund work, which department they're in. Again, I will point you to the bottom where 10 years ago we had 7.3 employees per 1,000 in the general fund, and in 2018 we have 6.1. What that really means, I will interpret that for you. What it means is it's harder to provide service. We are a service-dedicated organization. In order to provide that service, we have to have people to do it. It's a people-to-people organization. So when the population goes up and our employee ratio goes down, it puts a strain on the organization to keep providing the same kind of service. Let's go to the next page, number 25. This is how our general fund compares to our benchmark cities' general funds. Okay, let's go to number 26. A couple of things I want to point out on this. This is a little bit more detail about where the money comes from in tabular form in the general fund. And I'll point you to the bottom. In 2008, we had $580 per capita in the general fund to spend on services. In 2018, that had gone down to $554, which is a decrease of about 5%. But if you take into account the buying power of that money, it actually went down by about 21%. Let's go to the next page, number 27. This is another way of comparing ourselves to other cities. The different colors of those horizontal bars represent different kinds of revenue that come into the city, taxes and various kinds of fees and so forth. So you can see of our benchmark cities how we compare in terms of all of that. And you can see Killeen is it's actually below center, toward the bottom of that group. Okay, let's go to number 28. This, we're turning away from total, and we're just looking at sales tax here. So this is the actual sales tax rate that Killeen has had since 2008 or 9. And on the right-hand side, what you see is the amount of sales tax per capita. And you can see it was up there at about 155. It started to dip a little bit for a few years, and it's starting to come back a little bit now. This does not take into account the value of inflation or the impact of inflation. It's just raw numbers. Let's look at number 29. 29 is how Killeen compares to its benchmark cities in sales tax. Again, we're in the bottom half of that group. Number 30 looks at property tax. And on the left-hand side of that slide, you can see the total property tax rate. So, for example, Copperas Cove has 79.79 cents per hundred. Killeen has 74.98 cents per hundred. And then the colors represent how that money is used. When we adopt a mill rate, we have to designate the portion that goes to operations and the portion that goes to paying for our debt service. So the blue part is operations and the red part is debt service. And I've said before to the council, this is a rule of thumb judgment, but in my rule of thumb judgment, we ought to have about a 25% of our mill rate going to debt, and ours is a little bit higher than that at this point in time. Number 31 is kind of the historic property tax. It's a table showing the actual property tax, the history of our property tax in Killeen. So in the second column, you've got the actual property tax rate that has been in effect. And if you look between 2014 and 2015, it went up. The reason it went up was the effective tax rate. So what happened in that year was the actual valuation of the community went down. So in order to collect the same amount of money, the property tax rate had to come up. So it wasn't like the city council said, we need more money, let's go out and raise taxes. No, what they said was, we need the same amount of money, so we have to raise the tax rate to get it. Then if you look at the second to last column, that is the impact. John, is that just the disabled veteran exemption, or is that total exemption? Total. All right, so when you look at that second to last column, you can see that 10 years ago, 9% of our total valuation in the city was exempt from taxation. Over the last 10 years, that has gone from 9% to 20%. Our estimate for this coming year is 24%. And I will tell you that the bulk of that relates to the disabled veterans exemption. It's not all disabled veterans exemption, but most of it is. And the rapid increase over the past several years has been almost entirely veteran exemption impact. Okay, let's go to number 32. This is our taxable value compared to our benchmark cities. And in this case, we're very close to the bottom. Okay, then let's go to number 33. 33 is a graph showing our general fund revenues compared per thousand population compared to our benchmark cities. Let's go to number 34. What this one is just dealing with our ad valorem tax, our property tax. And so the blue, well, let me say this. Up through 2019, this is actual numbers. Beyond 2019 is our projection of what those numbers are going to be. The black line on the top is the inflationary impact. So we have taken actual inflation on 2008 and drawn a black line, and then from 2019, we've used the projection that I showed you before of what inflation is going to be, our anticipation of what it's going to be. So the black line represents the same buying power from 2008 forward. The blue part of the bar represents what we get. And the red part of the bar represents what we don't get because of exemptions. And given the fact, when you looked at that previous table and you saw in 10 years it went from 9% to 24%, if that same kind of growth in the exemptions continues, it's going to look like that red piece there. And if you go out 20 years, we're not keeping up with our inflationary costs. Okay, let's go to number 35. Okay, this deals with staffing. So what we've got here is on the top two, the top left and the top right, deals with the left graph on the top deals with actual amounts of staffing for the entire organization. The one on the right, the blue one on the right, represents staffing per thousand population. I've been talking so much, I'm starting to get a little bingy. Sorry about that. So the top left is what we'd like to see. So what that means is we take the number of employees we have now for population, and over the next 5 years, our population is going to grow. And if we just keep the same ratio of employees for, thank you, for new population, it will go up by that slope, which means the employees per thousand will just stay flat. Because we're going to stay the same relative position in our ability to serve that population. The bottom two graphs are our projection of what is going to happen. So the top ones are what we'd like to happen. The bottom ones are what we think is going to happen. And what we think is going to happen is that this downward slope in actual number of employees is going to go down. And it's going to have to go down because we need to balance the budget. That's the trajectory that we're on. So if that happens, then this also happens, which means we go from, looks like about 8.7 employees per thousand down to 7.3 employees approximately. So this is the trajectory that we believe that we're on. Let's go to page 36. So this is the general fund and our actual kind of one step more detailed projection of what the next 5 years looks like. So in 2018, we budgeted for, and it looks like we're on track to receive, $82 million in general fund money. For 2019, we're projecting that will go down to $81.4 million. And the reason it's going to go down, primarily, is because we're losing our public safety grants, which we've had the benefit of using over the past several years, and they're going to go away. And that is going to impact our total revenues. And then it will start going back up again. The natural growth that takes place, it will not keep pace with inflation, but it will continue to grow again after our projection is. Okay, let's go to number 37. Again, I want to remind you of these strategic issues. I want that to be in your mind because the next slide I'm going to show you does not take those issues into account. Let's go to number 38. That's taken the same information that I've already shown you and just putting it into a line graph. So the green one on the bottom is our projection of revenues. So between 18 and 19, we think it's going to go down a little bit, and then it will start coming back up. The red line takes fiscal 18 and just adds an inflationary factor to it. We believe that inflation is going to be about 2.5%. And so if our current expenses, adding nothing to it, just increases by the natural increase in the cost of goods and services, it will go up on that slope. Now, there's a difference between those two lines that you can see. And let me say again, this projection does not take into account the it takes into account balancing the budget. It does not take into account the other 4 strategic issues. So the work that we are going to do over the next month and a half is to create a budget where the red line and the green line are on top of each other. Okay, I am going to be bringing you solutions to these challenges. I am going to be bringing you a balanced budget. So what this presentation hopefully has done is just explain what kind of a challenge that's going to be. It's not a challenge that we can't deal with, and it's not a challenge that we can't overcome. So I don't want anybody to misunderstand that or to get the wrong impression about it. We are absolutely going to balance the budget and bring it to you in a responsible way. But it's going to be a challenge. And there are a number of decisions along the way that I can't make by myself. So I will be bringing issues to you one at a time, saying, what do you want to do about this, or what do you want to do about that? And depending on what your answer is, I will take the information that you give me and I will use that to balance the budget. Does that make sense? All right. So with that, that is the conclusion of our status report on the work of the budget up to this point in time.
I had one thought that came to mind as you're doing like the comparison between the number of employees based on 1,000 and our growth or projected growth, and then you compare that to other cities. And I don't know if it's possible to take that even a little bit further, because each city is different. And when I look at Killeen, you think about our transient nature that we have, and it would be nice if you can compare, how many people move in and out of our city compared to others, because what that requires is more staff. I don't know how many people actually turn in their water bill every day or turn it off compared to that, because that's a service that you do need more employees, because sometimes we get calls on that, but that's just one of many. I mean, we get a lot of calls, even on the state. We have a local DMV. I know that has nothing to do with us, the city, but as council members, I know we get a lot of calls because it is such a busy place here in Killeen. And sometimes they staff it based on what other cities have, and you go to their city, you can go right away. You come to Killeen, they don't have enough personnel because I think they budget them just pretty much the same as others. And so that would be neat if we can figure out, okay, how many people are coming in and out of our city so that we can know what services, how many garbage cans are put out, how many utility bills are turned on and off, and use that as comparison, because sometimes it can be misleading. Another city may not need as many employees because they're not that busy in the transient nature as us, So those are things that I think.
And let me just say this. As we have gone through our business plans this year, as I told you before, we've identified our mission in pretty good detail. We've also identified the beginning of some performance and performance measures that go along with those mission elements. So we'll be gathering data that support the services that we won't have it for a couple of years, Mayor. It's going to take a while to get into a routine and actually be gathering important data that we can use, but we've started that process. Now, the comparison thing that you're talking about, that would be something that we would have to add to our research.
And it's one thing that we're trying to figure out. I know that HOT right now is in the process of trying to figure out because our growth is just, huge, and we're trying to figure out what's causing that. So we're going to, hire a company that's going to try to figure that out. Why is it Killeen growing so much? And I think you hit it there, because a lot of times what causes our problems is what causes our growth. And it's a good and it's bad, because the cause of it is that low tax value that you showed because of our affordability. People love to come Killeen because it's more affordable than most cities. You know, you compare that to our neighbor Harker Heights, where their median price of a house is 200,000 plus, compared to Killeen at 138. That causes that growth to happen. So, Mr. Kilpatrick.
Thank you, Mr. Merton. This is not it's not a question, it's just an observation on my part. From my way of, as I'm going to look at this, I don't want to get in details. Page 24, 2008 general funds based on revenues, as I saw in everything in the briefing. 7.3 per 1,000. On 2018, 6.1 per 1,000. Looking at 2019, 20, and 21 projections out to get that green line to match the red, red to match the green, whatever you want to do. So how many services what services did we cut when we eliminated 1.5 employees per 1,000?
You know, that was spread throughout the enterprise, and it resulted in things like not growing. I mean, that was a real impact. But there were things like we've dealt with recently with risk management. We just stopped doing risk management. We dispersed our HR functions out to the departments. We took purchasing and did away with our purchasing department and then just added an extra duty to departments. All of those decisions I believe, were probably done in order to squeeze the way we've squeezed. And there were probably many, many more that we've done that way. The problem with that is, those are short-term solutions to a long-term problem. And the problem is, like with purchasing, if you don't have a good controlled purchasing system, you're losing money by not being efficient, and you're opening yourself up to fraud. So, in my way of thinking, we have to kind of reverse some of those decisions and restructure how we do our business so that we can be more efficient and we can protect our assets and our people better than we have.
Thank you, Mr. Mayor.
Mr. Rivera.
Well, if you want to put fear on me, you did it.
No, I didn't intend to do that,
Because
Mr. Rivera.
let me tell you what I see. And there's no question, I'll do a scenario, and then later on when the question we get ready, we go into it. On slide number 10, according to the aviation, we have a situation there. And I hope we could discuss this during the process of the budget, not after the budget. And compensation being below the marketplace, there has been a trend in Killeen for years and years and years, and that's why we lose so many public safety personnel per se. And please, whoever says it's not about money, they should ask the people that left. Employee, in slide number 17, employee versus service. That's including public safety and all the service that we require to give to the citizen because they pay taxes. In slide 34, the money that we're not receiving, I bet you that's part of the aviation, part of the house, that we're not getting out of what we're given. And finally, the way I look at it, is the challenge that we're going to have in slide number 38. It's about how we're going to cut services. And I know you have that slide there that looks beautiful because we're going to put a line on top of the other one. But then when I ask myself, are we going to base the budget 2019, and you don't have to answer that right now, if you're going to base the budget of 2019 based on cutting department services, I'm very concerned about that. We just lost the grant for public safety, and I hear so much comment about we need more public safety personnel, and they're leaving left and right. And I just can't see how we're going to cut that department also as well as other department, like street department and so forth. I would like to see those issues, Mr. Mayor, come before we go into the budget, because I'm leaving in 2 years, God permit. You may be here 6 years. Other city council members coming in, and if we don't do nothing right now, as we see this, I think we're going to have a balanced budget based on sacrifice to the citizen, because we ain't going to have the services to provide what they really need to, especially the way we're growing. Service, everybody does need it. And the number one problem that we have in our city is I don't see so much citizens sitting there to listen to this. Issues like this one. I'm a citizen. Once I leave this tonight, I'm a regular citizen like everyone else. I could see myself 4 years from now. We need to take this little presentation you gave us very seriously, because I don't want to see a budget just to have a balance, just because we want a balanced budget, but we cut in services and we cut in departments. I'm very concerned, very, very concerned.
All
No
right.
question, Mr. Mayor.
Thank you. And remember, he was just presenting it to us.
No,
with
that's what I
a-
said. I don't want to ask a
Yeah,
question.
so we're going to have time to discuss it.
So what I really want is for the council to take this information and think about it.
Yeah.
We'll be bringing it back, piece at a time. We will have the discussion, and I just want to give you the backs, put it in your minds, put it in your hands, let you be thinking about it before we start that discussion.
And I don't want to speak for Mr. Johnson, but do you have this on a PowerPoint? Because I'd love it on a PowerPoint, if you can send it to us on a presentation.
I just have one question.
Mrs. Fleming,
We can do that, yeah.
Mr. Olson,
Sorry.
you got it? Are you going to put it on the website and all that? Yes, sir. Okay.
I would just like to say, I think you've done a great job presenting this to us, sir. And I know it's just a formality that you want us to look at, make a decision, and come back and talk about it. And I know you haven't made any decisions about letting anybody go and things of that
No,
nature.
absolutely not.
We do respect you as our city manager. We're going to look at what you presented to us and work with you, and that's what we have to do, sir.
Yeah.
Thank you very much.
It's a lot of good information. I mean, this is stuff that we as council members can use as we go out and speak to our citizens. 'Cause a lot of times, they don't really understand it, so it's like, it's good. All right. Well, thank you.